What's good, family? What's good? What's good? We're back again. We're back again with another TTTM video. And for those people that don't know what TTTM means, it just stands for trading towards the money. Another TTTM session on Instagram, live on Instagram. So once again, whilst we're waiting for everybody to jump in, I want you guys to look at the screen and tell me what you would have done in this scenario and where you would have done it from. In fact, we're going to be going through two examples today. So this is one I took last week, and I'm going to show you one that I just took this morning. I don't know where it is now because obviously I'm doing this right now. Look at the chart for now and look at where you would have jumped in, and then I'm going to put my annotations on in a minute, and then we're going to be chopping up as well. So this is going to be another liquidity series. Basically, this all I'm showing you guys is just trading towards the money. I'm showing you guys liquidity, because, you know, all I do is trade towards the money, and I teach loads of people to trade towards the money. Let's do that right now. You might hear my sons in the background. You know I'm a dad, so I got tons of boys, tons of kids. Anyway, guys, let's break this down now. What do we have here? This is another example to what we had last time, and you're going to be seeing this throughout the charts. If you would have gotten in similar to the area where I got in, drop some hearts, and be real. Don't be fake, right? Don't be telling me you would have jumped in when you wouldn't have jumped in. You would have jumped in right here, around this area here. So what do we have first of all? So we have an institutional candle here. And what I didn't mention on my last video is this is not an institutional candle when it's up here. Although it might be an institutional play when price is up here. Yeah, it's not an institutional candle yet for us because we needed it to break back beneath the short-term low that it created right here. So there's a short-term low right here. We needed the price to break back beneath that short-term low, and that's what made it an institutional candle. What we do is we trade like the footprints of the institutions. So the institutions will leave footprints behind, and we go off based off that. The moment it breaks back beneath it and starts breaking structure to the downside, so you guys can't see that. Let me quickly zoom in a bit more. There we go, yeah. The moment it breaks down to the downside and breaks structure to the downside as well, that structure right here, all you're waiting on is for price to return back to that institutional candle, this one over here, to return back to it here for an entry, then to sell it. Okay, so that's like number one, first of all. Let me zoom in a bit more now so you can see it like that. So what I did is I didn't catch the first entry, which is over here when it first tapped into the institutional candle. It didn't tap into it here, by the way. It came a few pipettes off, right? But so that's not good enough for me. It didn't tap into it right here, right when price was over there. But it did tap into it or trade into it when it was over here. And so the moment it traded into that, so I don't believe I was watching the chart again at that time. But when I did see it is, I waited for another entry, the next best possible entry, which is this one down here. And all we had to do was wait for price to break back beneath this now institutional candle, the one that runs it into that high, takes out the liquidity from that high, yeah? Runs up here and then break back beneath that one. And I waited for an entry for that one. And the thing is as well, just along the way, look what happened along the way. Consolidation again. So you're going to be seeing this happen over and over again. There's not always going to be consolidation. It could be equal lows. It could just be a low. Okay, it could be a low that they set in a session or something like that, and it could just be a low. And then your aim would be to target the money, right? To target the money. And so what you would do is, once again, like I explained in the previous one, is that what do you think's happening here? The opinion being built up is that price was going lower. Then there was a slowdown period where price consolidated, and you instantly know what people are going to be thinking. They're going to be looking to jump in at this low, at these lows, putting their stop loss somewhere beneath this low. And so I'm going to explain something beneath this low in a second. When they put their stop loss beneath this low, that means there's now a pool of liquidity in this area down here. And so this is where you're going to be targeting. You're going to be targeting the money, targeting the liquidity, targeting the pool of liquidity beneath here. So the moment you enter here, there's no need to panic. There's none of this, what retail traders do when they break structure. They start panicking. Is it going to reverse? No, there's none of that. So let's just zoom in here. So you guys might not have been able to see what I was pointing at, but let's just zoom in a bit more. So when price did this, right? When price traded lower, came up higher, there's no need to panic. Okay, there's no need to panic. Pause the music real quick. There we go. Yeah, there was no need to panic because it had not run out liquidity yet. So if this is where the money is, price is drawn towards the money. So when you're holding this position to the money, that's what you're going to be doing. And so what you want to do is, at this level here, obviously there's going to be money. There's going to be money down here. There is going to be money over here. And then what happens down here is that people aren't just going to put their stop loss right at here. Some people will. Some of those zealous people, that want to get them tight stop losses, they might put their stop loss over here. But normally it's going to be within 10 to 30 pips beneath this low. And so this is why I took my trade about 9 to 10 pips beneath the low. So this was just another example of trading towards the money. Squeeze up the screen a little bit. Institutional play. Broke beneath, so okay, cool, we want to go lower. You wait for them to trade away, they generate some kind of liquidity, they pull back up into the institutional candle over here, This is where you find an entry. So this is where you find an entry. You need to find an entry. You know, it's something I teach my mentees, but this is where you would find an entry and you take it straight to the money. And then when you're taking it to the money, these pullbacks, don't be afraid of these little pullbacks because we've not traded to the money yet. You can take partials if you want. If that's according to your trading plan, then go ahead and do it. But if it's, you know, if your trading plan says I'll take my trades to the money, you hold to the money. And then the more you do that, the more confidence and the more confidence you'll gain. You'll be able to keep your emotions together whenever you're in a trade. So you won't just be panicking when price pulls back. Yeah, you'll be holding your trades to the money. And as you can see, look what happens. They pull back, they start messing around here, and then look, it's just straight candles all the way down over here. Now I'm going to show you another example of trading towards the money. I don't know where this one's at right now because this was one that I just spoke about in the mentorship real quick. It's probably going to be my only trade today. I'm already risk free in it, so it's all good. But I'm going to see whether it's taking the money. So let's take off the annotations, okay? So far, if you're getting value from this, just let me know in the comments. Let me know in the comments, drop some hearts, drop some waves. I've seen a question, what is the most reliable time frame? This happens in all time frames. But if you're trying to catch that intraday move, then keep it on a 1 minute. Okay, cool. So let's look at this portion of price action. So we're going to squeeze it like this. And if my mentees are here, if our mentees are in this right now, drop a heart because you know we already took some money right now. We traded towards the money. Look, guys, this is, I know I'm shouting, but I get so excited because I don't know any other YouTube channel that's doing this right now. I don't know any other YouTube channel that's doing this right now, honestly, because I'm teaching people how to trade towards the money. We are smart money and institutional based, and it's all about the money. I'm going to pick up this real quick. Pick this up. You can see this is my mentorship group. This is the trade that I was just talking about. Now we're going to talk about it with you guys. I kind of just spoiled it, but it's all good. All I wanted to do was I wanted to say, where would you guys have jumped in? Like, you guys are a bit closer because you guys came from YouTube to my Instagram, and some of you guys on my Discord as well. And so you guys, you know, you feel a little bit closer to me because you guys have followed me along the different platforms as well. Like I said, if you're getting value from this, drop some hearts. I need to drop some waves. I need that engagement up. And after this video is posted as an IGTV, I want you guys to come back and comment again and drop some more love as well because, like I said, I want them high metrics and I'll keep on doing this. First of all, let's break it down. Let's break this down. I don't know what I've got showing. You know, I need to keep this stuff for the mentees. You know, I can't be dishing out everything for everybody, right? So cool. So you can see the screen right now. You can see what we're working with, and I'm just going to break down what I saw on this trade. We have liquidity being generated on the low at the lows. Yeah, I don't care about what it looks like. No matter what happened, look at this. Let me quickly zoom in a bit so you guys can see it. No matter what happened, what do you think the opinion being built up here was? Okay, the opinion was that price is going to go higher. Although it did go higher, that's fine because they're always going to get a piece of the pie. Although it did go higher, look, they generated liquidity at the bottom. There's money being generated here. So that was the reason for this last close candle or this institutional candle that ran the low. And it didn't become an institutional candle until it broke the high. And so, you know, some people would have jumped in price, traded back down into this institutional candle, you know, like into the last down close candle, and they would have traded it to the high and probably taken out this high over here. Okay, taking it high over there. So let me quickly zoom in a bit more to the left. But this is the play that I waited on because obviously I was busy in the morning. I waited on price to return back down to this institutional play. Right over here, price, look, they generated liquidity. That's like the first side. That's like the giveaway, really. So you get an institutional candle broken above, that makes it an institutional candle over here, and then we trade higher, we generate liquidity. So not only was equal highs, it was also consolidation, as you can see, also consolidation. And so, but we don't run out the money on top. And so instantly, I'm going to be thinking the moment we return back to an institutional candle, I'm going to target the money. So the moment we return back to an institutional candle, I am going to target the money. And so this is when I posted it to my mentees. I was just letting them know this is probably going to be my only trade of the day. And the entry came off of an institutional candle. And like I said, on the institutional candle series, and if you haven't watched that yet, you need to watch that. You need to go on YouTube after this live stream, after you've commented and liked, then go onto YouTube and watch that whole series. You want to catch an entry somewhere within this institutional candle. This is not a zone, by the way. I've just expanded it all the way out just so you guys can see that we're trading within that institutional candle. And then when you get your entry, yeah, the stop loss, the safest place to put your stop loss is going to be beneath the last down close candle. But I have refined ways of where else to put my stop loss, which is what I show my mentees also. And we take it straight to the money. And then, as you can see, we ran the money. And like I said before, the stop losses are going to be probably between 10 to 30 pips above this high. I already taken my TP because I'm done for the day. I'm going to go to the gym after this. So they've traded towards the money. They've taken that now. And so this is where you trade well So this is what I mean by trading well now. So you guys saw it on the 10 things I've learned during my 4 years of Forex trading is knowing when to take partials. You take partials or you close your trade at liquidity. Price is traded towards the money. We don't need to get all the money, but you need to get your piece of the pie and be out the markets. Price is traded to the money. As you can see, traded to the money, take partials or close your trade. You don't want to be that person who's just chilling, who's just it could get some more. Yes, it can go some more, but rather let your runners do the legwork. So if you've taken off 80% of this trade right now, you want to let 20% ride. Do you see it? And move your stop loss higher. This is when you can start trailing your stop loss if you wanted to as well. Okay, so guys, that was 2 examples of trading towards the money. Trading towards the money, 2 examples. And so this is also going to be posted on YouTube. But anyway, guys, yeah, that's all I wanted to show you today. If you took value from this, drop some likes. Other than that, guys, stay trading towards the money. Peace.